Okay, guys, what's up? It's Nacho Don. This is going to be part of a new um, charting trading series, um, more educational, I guess. As more people come in, and some of you might have trouble keeping up with my charts that I post and things like that. And I try to post really basic stuff in the room, right, with notes on it. And if you read my notes and you look at the chart and you think about it for a second, a lot of times I think that you'll be able to understand what's going on there. At least that's my intention. But what I wanted to do is talk about, like, let's go down to the very foundation of what makes these charts today, and this will be the topic today, and they're called candlesticks. So everybody's seen the charts that I post here, right? You see these green and these red. They're called candles. Okay, and I'll get to that in a second. But let's get right into what the candle tells you, right? Because you'll often hear me say that candles tell a story, okay, and a series of candles tell a greater story, and patterns of candles tell even a greater story. And candles are very, very fascinating to me. It's one of my favorite things when I one of the first things I started to learn when I started to learn how to trade properly. And I got this book, which is Japanese Candlestick Charting Techniques. Okay. And I would recommend this for everybody. It's probably in the range of anywhere from 60 to $100, the hard book copy. And you go through that, and I really mark it up and really try to get the stuff in my head, right? And even then, I still go and I refer to it sometimes when I see a pattern, and I'm like, what was that? What I forgot what that little candle is called when it's isolated by itself on the top, and what that means. Oh, that's a reversal pattern. That's called an island top or something like that, right? So there's all these cool terms for the patterns that the candles make, and I don't want to get into that today. I'm not. This is not a lesson in all the candle patterns that you can see. Okay, you'll see me posting now that we're in a bull market. I'm posting a lot of bull flags, and see Danny posting that as well. And that's basically pretty self-explanatory. It looks like a flag, right? It's got a pennant, or a pennant. It is, right? Think about waving for your favorite sports team, the old sports pennants. It's a flag. It's basically a flag, right? Those are bullish, and if they're pointing down and making a flag, that could be a bearish flag, right? That's the most simple type of pattern going, right? There's so many layers to this, right? And that's why the Nacho Research Lab is not a trading school, because you notice I refer you somewhere else for that, because that's a whole other endeavor, and it's a whole other commitment to really learn how to trade properly. But for those of you who are tailing trades, want to know how to make sense out of the charts for yourself. It really, I always say that everybody here is going to be a speculator and a trader to one degree or another. And in the future, the better you can get at these things, the more prosperous you're going to be, and the more successful you're going to be when it comes to trading, and then the more money you're going to bring home to your family. Okay, for the long term. So let's take a look. So again, I recommend this book very highly, and if you really want to understand what candlesticks are, it's fun. It's actually really cool to see. Japanese candlesticks go back 500 years, and it was used in the rice trade. And Steve Neeson was the Westerner who went over there and saw this, like, wow, they have all these techniques and all these patterns and stuff, and he brought it over to the West. And now this is pretty much standard used over here. He brought it over, I think, in like the 80s or 90s. So anyway, without getting into too much of a history like that, let's talk about the individual candle, right? So when we look at a chart, it's made up of tons of these, and they're all different sizes and shapes. Some are long, green ones, some are short, tiny ones. Why is that? Okay, so what this is every candle is basically, it represents price movement for a period of time. For a period of time. For example, if I was looking at a weekly chart, meaning that would mean that every single candle you see on that chart represents one full week of price action. And so let's pretend this was a candle. Okay, now they don't have the red and green here, but just look at the dark one as a red and the light one as a green, right? So what would happen here is that the red, the top of the body of the candle, this is called the body of the candle right here. This is the body. This is the body, right? The body of the candle. Does that make sense? This is a wick. Think a candle wick. And this is a tail because it's coming out the back, right? That's a tail, and this is called a wick. All right. So when the asset, if we were looking at a weekly chart right now, and we were looking at this one specific candle, we can say that we look at the chart and we say, well, the price opened here, and during the course of the week, it ranged between the top of the wick. Okay, I don't know why you did that on me. It ranged between the top of the wick and the bottom of the tail. So the price on the weekly candle, we don't know exactly where it was on Monday or Tuesday because we're looking at a weekly candle, right? But we do know that during that week, it ranged from up here to down here, but it opened here and it closed here on the close of the week. Okay, so 7 days later, it opened here. It ranged in here. It might have spent the whole time up here, but eventually maybe it came all the way back down and then it finally closed here. That's what that candle tells us. So there's a lot of information in one candle. Okay, and so when you look at the candle, you look at the open price, the close price, and then the range is actually a lot wider in between. Now, this is a green candle, okay, because I always use red and green. Some people use different colors, you know. You can customize the trading view to be whatever you want. Green for bull, right? Green for going up, red for going down, right? I think that's the simplest way to do it. So in this case, with a green candle, the open price was at the bottom of the candle. It's opposite of this one. But again, the range was the same, right? Between the wick, the top of the wick, and the bottom of the tail. And then the close was higher. Because the close was higher than the opening, right? That means the candle's green. So whether the closing price was closes above the open price or below the open price of that time period will determine the color of the candle. So if you see a green candle, you know that automatically for that time period, so we're talking about a green candle, the closing price was higher during that time period than where it opened, meaning the asset is generally heading up at least during that time period. Let's go to a Bitcoin chart. Here we are sitting at a cool all-time high of 52,100 to 52,200. Welcome to crypto, everybody. And so we see a bunch of candles. Now, some of you might have look at these charts that I post and say, well, what the hell does this mean to me, right? All these candles. Well, now with that information that I just gave you, right? Now we could start to look at these candles with a little bit more of a critical eye. Okay, so now you got the foundation, right? And so let's just zero in on a couple candles here. Now notice, what do I have up here in the corner? This is important when you look at my charts, or I usually put the notes in there: 1 day, 4 hour, daily chart. But at the very least, you can always look up here in the chart and see, is there a W there? Or is there a 1 day there? D means day. 2D means 2 day. So again, what does that mean? If I'm on a 2-day chart, right, and I'm looking at these candles, that means that each candle that you see here represents 2 full days, 48 hours of price action, okay? So again, here is a green candle. Remember the example I just showed you. Here's the opening. Let's zoom this up more. Here's the opening of the candle. So after this candle closed on the 2-day, This one opened here, and it ranged all the way from the bottom, because there's a wick here. I mean, there's a tail here, and there's a little wick at the top here. So it ranged all the way from here to here during that 2-day period. But the price settled and closed at the strike of the 2 days right here. Okay? So this is a bullish candle. It opened at $14,029, right? And by the way, you can see that up here as well. But roughly around 14,000, low 14,000s. You know, at some point during those 2 days, it dipped all the way down to 13,474, the bottom of the tail. And at some point, it got as high as up here at the top of the wick at 15,763. Okay, but it closed right here at about 15. Well, I'll just show you the close. The close is right there at the top, 15590.02. Okay, so again, this just represented the range. All right, now what happened on the next candle? The next 2-day candle, right? The next 2-day candle, what we see is, again, this is a red candle, so it's the opposite. It didn't open at the bottom of the body, it opened at the top. Okay, so it opened here, and it ranged between here and here, right? It ranged between this top of this wick and the bottom of this tail, and anywhere in between. And it opened here and it closed here. Now, why did this candle get assigned a red color? Well, the answer is because the closing price for that period of time closed below the opening price. Opening price here, closing price here. Range of price here. Range of price here. Okay? So that's the way you look at candles. And every single candle you look at is basically a visual representation of price movement. Okay? So let's take the same Bitcoin chart and let's change it from a 2-day to a 1 hour. Okay. Now what does this mean? Well, this means that every single candle that you see on the chart represents just 1 hour of price movement. Okay? So this is 1 hour. This big green candle is 1 hour. The next candle, 1 hour, 1 hour, 1 hour, 1 hour. You understand? So, and you can see on the bottom here, you can see that there's 1 hour ticking by, right? 15, 16, 17 o'clock, 18, 19, and so on. So there's a couple things you need to just take into consideration when I'm showing the charts. One is the time frame, and then what am I seeing in the chart? Why am I pointing out certain things, right? And I'll get to that in a little bit here, but there's so many things that you can tell from these candles that are just simply amazing. And you really could even become a very good trader if you just really understand candles very well. I mean, that might sound crazy, but it's true. Like you could even, because I've got all these instruments and things, and these are oscillators and moving averages and stuff that help me help me understand things better, and momentum and things like that. That's not what this video is about. You could learn that in trading school. But, understanding what you're looking at when you look at a chart. And remember, any asset in the world can be charted like this. And because we have such an amazing access for very low cost to this amazing software, right? I think I pay like, I don't know, $400 a year for this service. Keeps all my charts and everything. I've got the highest premium plan. But this is like worth its weight in gold to me. I mean, there were years ago when you would have to do this kind of thing by hand, okay? And that's how important these things are. But now we have access to this information just like this. It's almost like taking candy from a baby. The information we have, if you apply yourself and you can really learn this stuff, you'll really benefit. Okay, and that's why I always encourage everybody, get into the trading school. Get into the trading school, and learn how to do this. And then you come back to the Nacho Research Lab, and then you start posting up your own charts, and we start talking about the charts a little bit and stuff, and that would be great. So again, let's take a look at a couple different candles in here. So again, we're still on the same Bitcoin chart, but now we're looking at a 1 hour chart. So what happened with this candle here? This is a pretty odd looking candle, isn't it? Right? So it's a red candle, so we know that the close was lower than the opening. So what happened here? So on this hour, it opened here. We're looking at about 48,000 and a little bit of change, right? Right there. If you look over to the right, you see the price, right? So the candle opened here, and maybe it went higher right away. Maybe at some point during that hour, it went up to here, right? And then it went all the way down during that hour, all the way down to here to 45,500, right? So this is a pretty significant candle in the sense that this was a big dump, right? Because we see the price ranged this whole long way during this 1 hour. It got as high as 48,000 and as low as 45,500. Okay, so that's a $2,500 swing in 1 hour, and we know Bitcoin does that, and we know crypto does that, right? And so hopefully for you folks, now you're getting the stomach for crypto. You look at the chart 1 minute, it's up way high, the next minute it's down. But this is the way crypto is a highly volatile asset, even something like Bitcoin. But again, the candle opened here. It ranged during that hour. At some point, it was all throughout here, went all the way down to here, but then it went and it closed up here. Now, why do I view this candle as I would say it's kind of it's slightly bullish. But why would I say that? Because first of all, it's a big red candle, right? Well, here's why. This tail here represents the fact that people were selling it out, right? People were like, I'm bailing, or people were getting liquidated, and on their leveraged longs, and boom, they just started. There was a cascade of selling here, and it pushed the price way down. But what happened? Boom, bunch of buyers stepped up and bought and pushed the price back up. Okay, if this was really going to keep going down, we would have had to see a bunch of continuation after this candle that would have continued to cause the pattern to keep going down. And instead, what happened? We had a push back up on the price from this nasty dip of a tail. It closed. Yes, it closed higher than the opening, but it still closed a lot higher than the bottom of that tail. Okay? And then what happened on the next candle? The next candle was a small green candle, meaning that the range of the price movement in this candle was a lot tighter, right? It only ranged from here to there during that hour. Also, what you'll learn is that when you start to look at how these candles relate to each other, and in this case, I would even say that this might even, it's not quite called a harami. Harami is baby, means baby in Japanese. And if this whole candle was smaller and inside the body of this candle here, it's almost like the red candle has a baby, and that is a reversal signal. Now, that's something that you will learn if you read Steve Neeson's book, and you can start to see, like if I see something like this and I'm watching the charts and I say, well, we have a bullish push up here, even though it's a red candle. We have basically this is kind of like an inside bar getting painted, and this would be a little bit bullish to me, and then I want to see what's going on. Now, this doesn't mean that this is going to go straight up to the moon, but to me, it's giving hope that the bleeding that was here is probably over. But look what happened on the next candle. It dumped down, but then it pushed back up again, right? And the dump did not go as far as the other wick. And so, we're getting some signs of hope of going back up. And this is right in the $47,000 range. And then we got another small candle. Small candles represent indecision from the market, okay? This is another thing that you learn when you study candlesticks. The smaller the candle, and when the real small ones are like this one here, right? So if you see this one here, this is actually called a doji. And dojis a lot of times represent basically indecision, right? Because the price movement between opening and close are really tight together. That means the market is trying to figure out, am I a bull or am I a bear, right? Am I going up or am I going down, okay? And so just by the size of the candles, you can actually tell a lot of different things. Here's another doji, right? So this is a real tiny doji. It's very indecisive here. Next thing you know, a big red well, not a giant red candle, but it's fairly big, paints here. Okay, what's going to happen next? Oh, it paints an inside bullish candle. And so that's bullish, right? And so then we had some continuation here. And then so on and so forth. And then it just basically kept going up. But you'll notice that the market never moves in a straight line. It never goes like this. It never goes like this and then up or down. It kind of goes a little bit like waves. And what we want to see on something that's trending upward is basically higher highs and higher lows, right? So what do we have here? If we zoom out of this, and let me go to a 4-hour chart now. I'm going to change this to 4 hours because I could look at this on any time frame I want. And let me just say this real quick. The larger the time frame, such as 4 hours, 6 hours, 12 hours, 1 day, 1 week, the larger the time frame is, the more significant the candle movements are. Okay, whereas if you get down to a minute, they still mean something. Like if you're leverage trading or something, you're watching the chart and every candle, every minute is painting a new candle. But when you really see price movement zoomed out and looking at it from a daily or weekly perspective, especially, you can really get, I think, a much more accurate reading about where things are going. Okay, so anyway, that's just a little bit of an aside. So what do I want to show here? Okay, well, first let's talk about the higher highs and the higher lows. So here we have a low, right? This is pretty low. This is getting scary, right? Because we were up here, and then it's trickling down. Oh, it's fighting in here. It's up, it's down, it's up, it's down. You could just see there's something going on there. Which way is this going to go? Is it going to keep going down like this was? Or is it going to go up, right? And then you'll see me drawing trend lines at times, right? So I could just take something here, and I could go connect these candle bodies like this. I could be like, nope, rejected, up, rejected. And to me, this is looking bearish at this point, right? So I'm definitely not strapping on along here or something, or I don't want to be buying here necessarily, right? Because this is looking kind of bearish, at least on this 4-hour chart, right? But one thing that you can see here is that it put in a what's called like a double bottom. These are other things that you'll learn when you start to look at candle patterns. This found support here, came down here and found support in the same area. Double bottoms are indicative of reversals of the trend, right? And they're bullish. So how would you know that if you didn't read, if you didn't study, if you didn't hear it, right? And you'll hear me say sometimes double bottom or double top. Double tops are typically bearish. Okay. So anyway, we got a double bottom here. So that's interesting. And we got some price action moving up here, and then we have this trend line here, and then we get on the other side of the trend line. Now we might have something. Right now we might truly have a reversal of this price trend here, okay? Because look at it, and also, again, I'm trying to just give you an overview of looking at these candles, how they tell a story. And what we have here is that, look at this candle. This is a fascinating candle on the 4-hour. This is a tiny little body, so it opened up. It opened down here, and it closed up here, just a tiny bit higher. but it ranged all the way down to here. But then the bulls came and pushed it back up, and they said, no, we're buying here. We're not going to let this go down. We're buying, right? So the buyers stepped in here and then drove the price up, and then it kind of, okay, that was tough. I'm out of breath. Let's just chill for a little bit. Let's just go sideways. Okay, I think I could do it now. I think I could cross that line. Oh, no, you can't. Smack back down. Okay. Well, let's try. Oh, we're falling off the cliff. Boom. Buyers step in again. We could do this. And they push the price back up. And now we're at the resistance line where it got rejected. 1, 2. Will the third time be the charm? Yes, we actually got over it. Now, it did come back down and dip into there. But, I always like to see 2 candles on one side of the line so you can get a thing. And I think the fact that it closed here and then it closed here, that's kind of bullish. So even though it dipped here, this was just a buying opportunity down here. And I would have probably bought over here a retest of the trend line. But anyway, that's a different trading lesson. But you get the point here. And then, boom, what do we see? Sure enough, it's giant confirmation that this could be a huge trend reversal. Okay, now you'll notice here they get a little scary, right? Because it comes back down and it seems like it's gonna go crap back out again, but it doesn't even reach the line. It starts going sideways again a little bit. Assets always need to breathe, and then it resumes the trend. And then look at where we are now, right? The trend obviously continued, not without its dips at times, and then continuation. Again, the asset needs to breathe, it needs to recharge, and then it continued on its way. So again, looking at these candles, in the tails and the wicks and stuff can tell you a story. Okay, so I would ask you to please try to look more critically when you look at the charts and stare at those candles and try to see something and see the price movement and see how one candle relates to another. And again, this takes study, this takes time. I have many hours in this, so it is like riding a bike for me at this point, but I'm still learning every day. And some of you will become much better traders than I am, right? You'll be more organized, you'll be more together, you'll be more committed, and we'll all develop our own styles. But what I want to do with the Nacho Research Lab is have a place where we can all come together and say, have you considered this? Or, hey, check out this chart. I found this chart when I was going through some charts today. Wow, that looks fantastic. That looks like it's ready to pop, right? So we want to get in there and buy that, right? Okay, so let's just look at here. And again, let's talk about higher highs and higher lows. Here's a low, right? Okay, well, here, maybe even go back here, right? Here's a low. Here's a low. Here's a low. Here's a low, because it went up and then down. It went up and then down. So here's another low. Then it went up and then it went down. There's a low. It went up and then went down. What's the pattern here? The pattern is higher lows. So this low is higher than this low. This low is higher than this low. This low is higher than this low, right? That's common sense. This high is higher than this high. This high is higher than this high. This high is higher than this high. That's a dead-on bullish trend right there, right? We got higher lows and higher highs, right? So, until this thing tells us we're going to roll over or we're going to quit, we're riding this bull, right? Because this is even though it's taken some dips and it goes up, then it goes down, but then it goes up, but you see the general trend, of course, is heading up. Okay, and so those are called, when you hear me say higher highs and higher lows, that's very bullish, right? And if I said, lower lows, right? So if this bar came down below this one over here, if this came down to here, well, that's not a good sign, right? Because this is many days later, and now it closed below this other low all the way back here. So that would be bearish, right? Okay. One more thing, and I'm going to probably close this out soon. Again, Now we're looking at a 4-hour chart. So just to recap from the beginning, every bar on a 4-hour chart represents what? 4 hours of price movement. Okay, let's look at this bar right here because I find this one kind of interesting. And let's just draw my little ellipse there just to put a highlight on it. So we've got these big bars, right? When Luna was climbing this mountain, boom, boom, boom. And by the way, oh, look at that. We're basically almost at an all-time high. This was the all-time high here, though, right? 770, right? At the top of this wick, right? So we got these big, bullish green candles, right? Followed by, you know, these little like, okay, I'm going to take some profit here. I'm going to get out and I'm going to sell a little bit. Oh, but the bulls say, no, we're going to buy here. Thanks for the discount. Oh, indecision. We got a small candle here. We got a wick. We got a tail. Are we going to reverse? Are we going to roll over? And the bulls come in and say, hell no, we're taking this up. All the way up to here, right? So Luna's been in this crazy bull run. And, for many of us, it's been very good. I heard some talk about Lamborghinis in the group. Some people are going to get some Lamborghinis. I mean, that's music to my ears. Vroom, vroom, vroom. And we got this candle here. So what happened on this candle, right? Because what we see here is it kind of peaked out, right? So we got the open here. So we went through these candles. Again, small body, indecision. Is it a bull? Is it a bear? Is it a bull? And then we got the bulls to step in and just drive this price from $5.40 all the way up within a period of 4 hours. At some point, it reached $7.70 up here. Okay? Now, but what happened where this candle closed? What happened is the bears pushed the price back down. So rather than continuing on and going off into the sunset onto $10 and $20 and whatever, the bear said, not so fast. We're taking profits here. We are going to chill, and we're not going to let this thing run so fast. So it pushed the price all the way back down to $6.64, almost a full $1.06 lower. Okay, over that course of that period. So people were like, we're going to the moon. I'm going to have 2 Lamborghinis. And then the bull said, no, you don't. You're not getting 2 Lamborghinis. You're only getting 1. We're going to push this back down here. And then it settled right there. And then the next candle was kind of still bullish. But you notice how it tried to go up during this 4-hour period, but it just didn't have much, right? It didn't have much in the tank. That's why it's a small candle. Right? We didn't have very good follow through here. So really, while this might not be considered a doji, I would call this what's called a spinning top. Still a pretty small candle that represents indecision. And then of course we want to keep an eye on what's going on. Now, sometimes what I might do is I say, well, let's take a closer look. Let's go to the 1-hour chart. And let's see if I can see something else in there that was going on, right? So now we've got more candles because we need 1 candle for every hour instead of 1 candle for every 4 hours. So I got more information to work with here, right? And so we've got a couple bearish candles here, but not too bad. And then we got a couple bullish candles, but not too strong. And then we get this beautiful candle here, but it peaked up here on the hourly, but got smacked back down. Again, those bears said, no. Or, people saying, oh, I'm glad it popped back up here. I'm going to take some profits and get out now, right? So, and then it got pushed back down, and then it looks like it's consolidating, and it looks like it might form a flag, and this could have been bullish, but I think what these big wicks getting pushed down told us here is that most likely this was going to break bearishly. Okay, now hindsight's 20/20, and I wasn't exactly looking at this at the time because Luna had gone up so much. I was like, I don't care if it gives back a buck or two. This is like there's a couple there's a lot of profits here. So anyway, then it did break down, right? So it broke down here. and and then we knew we were going a bit bearish, at least for a little while. But then it sort of consolidated in here, and this is an hourly chart again. And then you see, are we going to go up? Are we going to go up? Are we going to go up? No, we didn't do it, right? And so then it was just kind of drooping down, and we had lower highs, and we had lower lows. And then it kind of stopped around here and started to really consolidate. And then it took like this one big dump, and this is when I noticed a pattern, okay? So I was looking at this chart, and the price in general from that 770 top was sort of trickling down. It was going up, but then it was going down a little bit more. Then it was going up, and then it was going down a little bit more. And so, I wasn't too concerned because it wasn't dumping down. It was just sort of trickling down, right? And usually that could just be a sign that the asset is sort of recharging. And so what happened here? Then I just saw, just the other day, look at this. This is called head and shoulders, right? And this is inverse head and shoulders. So head and shoulders flipped upside down, where the head is like, up this, and then you got the two shoulders on the side. That's bearish, okay? But inverse head and shoulders is the opposite of bearish. It's bullish. So, how would you know this? Unless you read the book, unless you study trading, right? Unless you follow Nacho. So look, this is the left shoulder. Then came the head, right? And then, and I'm not going to get into explaining all the details of this and how it relates to volume and things like that. But for those of you interested, this is fascinating. This can be fascinating stuff. But look what happened here. So we got the head, then we came up, and it was right around here when it started dumping here. I said, "Oh, this is going to be an inverse head and shoulders. This is forming the right shoulder," because I've seen this happen so many times. And so, really, this was like somewhere in here, right? And anywhere between like around here would have been a great buying opportunity, right? And I even said in the lunatics room, I said, guys, this looks like it's painting an inverse head and shoulders. It's a great buying opportunity here. Did anybody listen to me? I have no idea. So anyway, and then you can see it reversed here, just like making the right shoulder. And then, of course, once it breaks this neckline, right? Once it breaks out of this green section here, it broke out there. But, we want to have another candle confirmation. And then, boom. To me, that's confirmation. You can buy right there with a lot of certainty. Now, you'll notice that it did go up to 670 and came all the way back down to that point, right? So a lot of times if you miss the breakout, you might want to wait for it to do a bit of a retrace, and then you could have gotten in around here, right? Because I think it's still bullish, because this is too far to be like a fake out, okay? You hear about fake outs and bull traps and things like that. To me, this was already well beyond being some kind of fake out. So this pullback was just to shake out weak hands, okay? So anyway, and then you see it put in this beautiful tiny little reversal here, this little gravestone. This is called a gravestone doji. See, these things have names, and the things have names for a reason, all right? This is really beautiful stuff, and one of the reasons I like crypto so much, I like trading so much, is because this is fun and it's intuitive and you can learn so much. And this is, believe me, what I'm teaching you right here is, and I realize it's not an in-depth lesson or anything, but these are kind of concepts that I'm encouraging you to go and learn more, because the more you learn how to do these things and read these charts and take advantage of the information that you're able to ascertain from these patterns and from these candle sizes and from hanging around guys like me, the better you're going to do in the future. All right? I mean, look, we don't want to be working at 7-Eleven, right? We don't want to be asking people if they want pickles on their Big Mac. We want to be taking advantage of these beautiful assets. And we want to understand how they work and how they move. And then we want to prosper from it, right? And we want to do good. Hopefully, you all want to do good things with the money, not only for your family but for others. Okay, so I'm gonna probably leave it at that. Let me see if I had a couple other. Yeah, okay. Let's just look at this real quick. So what happened here? this was this is before the big Luna breakout, but you'll notice that every time, man, we were getting all so frustrated, us guys in the Luna room and stuff, because we were like saying like, what the hell's going on with this asset? Every time it goes to like break out, it gets smacked back down. This is a daily, by the way. This is a daily, so you see every candle's a day. And so every time it tried to move, it gets smacked back down. Every time it go up, smack back down. Every time it go up. To me, this was somebody manipulating the price, or some big money saying, we want to keep the price down here because we want to keep buying it. We want to keep things calm for a while. You know, these might be insiders or something like that, right? Big players that are keeping the price suppressed. And then all of a sudden we get that breakout there, right? We get that breakout. So I have this highlighted here for a reason, because there was a real battle of the bulls and bears there. Could be price suppression. You know, I can't be 100% certain on that. But once this thing started to break out of this range that it was in, we can see that that was the sign where something big was about to happen. And then sure enough, we got a bigger candle here. We totally broke out of the range. We had a little bit of indecision here, and then boom, there's that big candle. That's telling us, look, we are going higher, and we're going a lot higher fast. Okay, and so we've had this very violent move with Luna, and hopefully it will continue. We'll see. All right, and that's it. So here we go. You know, I drew this candle here. Obviously, it broke out here, so that to me is a good sign. This might, you know, again, notice the flag. Notice how it looks like a flag or a pennant, right? Bull flag. This is just one of the more common patterns. And, you know, this thing could be heading towards $10 very soon. You know, we'll see. We'll see. Again, this is only a 1 hour chart. So, you know, I would want to see a couple candles confirmation, at least going sideways and slightly up on the 1 hour. Otherwise, you know, it could be a fake out and could drop back down. But, you know, we'll see about that. Anyway, I think that's it for now with the candles. Hopefully you learned something about how to read these charts a little bit better. Look at this crazy candle here. Look at how this all ranged in here. Opened here, ranged all the way up to 610, dropped at some point all the way down to 490, and then closed at 520, right in here, this tiny little candle. That was that's a pretty interesting reversal signal. So we were trickling down, and on the 1 hour it gave us that beautiful, I think that's a dragon fly doji, or long-legged doji. And dojis can be indicative of reversals. You know that if you study this stuff. And this was a nice signal here that things might be reversing the trend from downward. So, you know, I just noticed that just right now. Pretty beautiful. And sure enough, that is exactly what happened, because, you know, we closed at 520 and right now we're at 730. All right. So that will conclude the lesson on candlesticks. I hope you enjoyed that and got something out of that. Let me know if you like these kind of videos, and maybe I'll keep doing these kind of informative videos. Okay, take care. God bless. Bye-bye.